is the DeFi Decoded podcast by Ninepoint Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome to another episode of DeFi Decoded. This is our first episode of the new year, 2022. Omicron is spiraling out of control. Crypto markets are extremely volatile, and the Fed's having another taper tantrum, which is causing risk assets to bounce all around. So we're going to just try and rise above all of this short-term noise that we're seeing out there and talk about some big ideas, starting first with some recaps of what happened in 2021, and then talk a little bit about some of the big predictions or big trends and narratives that we're seeing for 2022. It's a lot to get through, but we're going to do it sort of rapid fire, and I think we should be able to get it all done in the time allotted. I'd like to just remind everyone, DeFi Decoded is available wherever you get your podcasts and also on our YouTube channel. Do check that out, Ninepoint Partners. We got some terrific content, both the podcast as well as some new educational videos and a whole host of other great stuff. So check that out. All right, with me is our fearless co-host, Andrew Young, calling in from what looks like a retirement community in Boca Raton, but it's actually a vacation home in Mexico. So let's talk big trends for 2021 AY. Starting first with DeFi. So this is called DeFi Decoded, and DeFi did not disappoint in 2021. At the beginning of the year, TVL, which is a measure we look at, was around, I think, $20 or so billion. And by the end of the year, it was around $250 billion. So, market in terms of value at risk grew 10x. And we also saw similar growth in terms of users as well. And I think within the DeFi space, there was another big theme. 2020 was the year of DeFi summer on Ethereum. That's 2 years ago for people who are paying attention. And that was, I think, the time when we realized that DeFi could scale and could work, thanks to the AMM and a couple of other really interesting tools. But as a result, it sort of became a victim of its own success, and Ethereum ended up getting kind of clogged up and gas fees went through the roof. So it created this mile-wide opening for these new L1s. Solunavacs are the ones that people talk about. That's Solana, Luna, and Avalanche. And they captured a huge share of total value in DeFi. I think at the beginning of 2021, Ethereum accounted for almost 100% of all sort of DeFi activity. And by the end of the year, it was closer to 65 to 70%. Of course, its total value on Ethereum grew significantly in that time because the pie was expanding. So I think the story of L1s really capturing value was a big story. What else, AY?
I think one of the biggest stories by far has to be sort of the rise of NFTs. We essentially had the equivalent of DeFi summer, but for NFTs in 2021. And now you're seeing the NFTs, everyone from pop culture, from athletes, artists, musicians, creators, you'll see that they've changed their Twitter profiles to different PFPs or profile pictures, NFTs. You're seeing Eminem buying a Bored Ape. You're seeing Jay-Z buy a CryptoPunk. And it's just been a crazy amount of growth in the NFT space. And initially, it's only been sort of in these profile photos, but they're increasingly sort of invading other spheres of content.
Yeah, absolutely. And I saw a stat from OpenSea, which is one of the big marketplaces for NFTs, that the January volumes were on track to actually exceed the highest month last year, which is kind of shocking if you know what's going on, the macro backdrop. The coin market has had a pretty rocky start to the year. So clearly there's something going on in the NFT space as well. Another thing that happened this year, I think, is that the crypto industry kind of woke up to its own strength in being able to influence and lobby around the policy discussion. So I think people may recall, listeners, that we did an episode back in, I think it was August, when there was a whole bunch of debate happening around the infrastructure bill that the Biden administration was trying to get through Congress. There was a provision in there that would have, I think, put it's fair to say a lot of restrictions on the potential growth of the crypto market and on DeFi specifically by using an overly broad definition of what a broker is that may have included everything from people who use decentralized exchanges to even miners on networks or people who are staking in proof of stake networks. So much to think everyone's surprised, the industry mobilized, this decentralized, sometimes disorganized industry mobilized and actually had a lot of impact on that debate. The language ended up making it in, but there's been a lot of clarification since that I think is going to allow the industry to grow. We also learned about the blockchain caucus, which used to include just a couple of sort of congressmen from Western states, and now includes I think a half a dozen senators from both sides of the aisle. So this kind of presence, I think, for a lot of people in crypto might seem antithetical, maybe almost betraying the ethos of something that doesn't need government. But the reality is, if you want an industry and an asset class to reach its potential, you need to engage with every kind of stakeholder, and certainly governments and regulators are one of those. So there are a lot of different policy debates and discussions that I think are set for 2022, which we'll get to in our 2022 section. But I think that was definitely something that I think people should feel very comfortable with and excited about.
Yeah, riffing off the sort of what you were talking about, the increase in regulatory pressure and sort of the reaction from the crypto industry has been what I think is one of the most masterful rebrands of the entire crypto industry, which is into Web3. The idea being that crypto is obviously very threatening, and a lot of people it's sort of gotten a negative connotation, unfortunately, within the mainstream public. Whereas Web3 is essentially the idea that the next iteration of the internet is going to be built on public blockchains. And that's far more accessible to people because everyone uses the internet, everyone loves the internet. And the idea of a fairer internet makes a lot of sense to people, given sort of the monopoly power of the technology giants that run Web2 nowadays.
Yeah. I think that's absolutely right. And I think it's definitely a masterful rebrand. In fact, there was an op-ed in the New York Times where someone made that case, basically said this is the greatest rebrand in the history of technology. Because crypto is this thing that, I think unjustly has a reputation for being sort of shifty or something. And Web3 sounds much more open and accessible. But I also think that Web3 is a useful term because it captures things that maybe crypto alone doesn't. When you think about crypto nowadays, it's a lot different than what it was a few years ago. A few years ago, there was cryptocurrencies, and then there were these new sort of speculative coins that maybe could turn into something someday, like Ether. Someday, maybe there'll be a bunch of applications running on this thing, and so we want to make a bet that that'll happen soon, right? That's all there really was to it. But nowadays, it's much different. And Ryan Selkis actually did a good job on our last episode saying, I think, he said something like Beeple's 5,000 Days, a one-of-one NFT, and El Salvador adopting Bitcoin as legal tender, and people playing play-to-earn video games. Are those things really that related? Like they're not crypto per se, or at least not all of them. They're more part of this new sort of way of thinking about ownership online and creating scarcity in digital goods and how that impacts the world. So I actually think, it's a clever rebrand. Maybe people think it's a bit cynical. I don't. I actually think it actually serves a very useful purpose.
Yeah, I totally agree. I think the project that got me most excited about sort of, I guess, the crypto space was Basic Attention Token, sort of from 5 years ago. I mean, it's still going on today and growing today. But essentially what it was is it's a internet browser called Brave browser. And the idea is that essentially, as you search the web on the Brave browser, you can opt into being shown ads. And in return for that, you are paid basic attention tokens, BAT tokens. And essentially the idea is that it's essentially disintermediating Google and allowing users to sort of control their data and monetize it directly. And I always thought that was like an incredible model, and it's very much a Web3 model. And I think that is a much easier and sort of softer sell to the mainstream public than something like a decentralized derivative or decentralized credit default swap, which we're obviously very interested in, but it doesn't scale well.
All right. Well, so that's the big things I think that happened in 2021. DeFi exploding. We saw the L1 wars. The creation of the Soluna and how they've impacted Ethereum. We saw the rise of GameFi play to earn. I think in the early stages in 2021. NFTs definitely found their product market fit as cultural assets that completely took over the culture, like athletes, musicians, artists, like everyone. Even Melania Trump has an NFT project, which maybe was the clearest sign of the top in that market. And then Web3 became a big buzzword, and we saw the policy debate become a mainstream topic that crypto actually could hold weight in. So I think those are some pretty big trends and narratives for 2021. 2022 looks to be pretty exciting as well. I did mention there the play to earn video games. And I think 2021 is where we got the taste of that, sort of like how we got the taste for NFTs with CryptoKitties, but really it took a couple of years for them to find, a fit. You're really excited about GameFi. So why don't we talk about that?
Yeah. So I think one of the best, I think it was the single best crypto asset to own last year was Axie Infinity. And Axie Infinity, I guess to give it a really rough description, it's sort of like a Pokemon game where you essentially breed Axies, which are you can think of them as like Pokemon or monsters, which you then use to battle with other players and earn rewards, and then you can breed them with this other token called the Smooth Love Potion, and so yeah, you essentially it has all of these characteristics that make gaming fun, but on top of that, it has this additional sort of crypto layer where you can actually be rewarded in financial value for sort of playing the game. And then it's also got this sort of, I guess, a little bit of a casino element where as you're breeding them, you don't know where, sort of, it's not like a set formula. There's a lot of randomness tied to it, which makes it really exciting to sort of breed new Axies. And the AXS token went from under 50 cents about this time last year to all the way to a peak of $160. It's down a bit now to I think about $70, but and now you're seeing the rise of a ton of other sort of what are called play to earn or GameFi ecosystems, things like Sandbox, Gala. There's a number, Yield Guild Games, which is actually, I believe, built off Axie Infinity. And I think we're going into a similar scenario that happened with DeFi last year. And what I mean by that is the fundamentals of sort of these play to earns, I think, are going to explode over the next sort of 12 months. But I don't know if necessarily the tokens are going to sort of increase in lockstep with this sort of increase in fundamentals, just because as the game gets more and more popular, the token is a little bit more and more inflationary. And so I think it's kind of an interesting situation where GameFi got sort of all of the hype with obviously with great fundamentals. And this year we're going to go into another incredible 12 months of sort of fundamental growth. But at the same time, there's going to be a corresponding increase in new projects that are going to be competing for sort of attention. And so I think it's going to get a lot more competitive, but at the same time, a lot more exciting for end users.
Yeah, I completely agree. And I also think that we haven't seen major game studios yet create play to earn video games or explore GameFi. And we saw what happened when major brands and other creators got involved in NFTs. It kind of changed the landscape. So I think that when it comes to video games, there's certainly lots of people who play them to make money in the play to earn space. But imagine you could do that and have a lot of fun, right? And it was an advanced, enriching, environment like modern video games are. I think that'd be pretty amazing. So I want to switch to just some financial numbers, and I think it's worth sort of talking a little bit about some of the milestones we hit in 2021 and what we're seeing for 2022. So in 2021, Bitcoin recorded an all-time high of $67,000 after closing the year with around 876 billion in market cap. The asset actually outpaced most major capital market indices, equities, and commodity measures. If you look at it in comparison to most other things, Bitcoin was up 60%, crude oil, which was much publicized, only up 55%. The S&P 500, 29%. Even the FANG stocks, only 37%. So Bitcoin did extremely well last year. We also saw M&A transactions in the digital asset space surging by 730%, and VC investment exploded astronomically. It was, I think, around $15 billion with more than 1,700 total deals. So I think a lot of people on this podcast are, curious, well, how's that momentum going to continue? I'll be honest with you, I think that valuations in the private markets probably have very little upside from here, but, prove me wrong. Like, I think that if you look at the value of some of these deals, OpenSea, for example, in January, just closed a deal at a $13 billion valuation after, I think, being valued at like $2 billion a few months ago. So how much higher can we go? I'm not sure. I don't want to, say anything is irrational or rational, but definitely we're seeing some things that are, I think, priced for perfection in the private markets. In terms of Bitcoin itself, Bitcoin, oddly enough, last year, despite being an excellent performer relative to other assets, did underperform most other cryptos. Even Ethereum, which supposedly was under threat from those layer one Ethereum killers, still ratcheted up a much higher return. So I think if anything, if this year is more of a consolidation year, we're not going to see 5, 10, 15x gains across all sorts of different coins, then I think Bitcoin could be the dark horse and be the one that actually outperforms. So do keep an eye out for that. One thing that I think will continue to explode regardless of the price of underlying cryptos is the size of the stablecoin market. And just yesterday, and this is early January 2022, PayPal announced that they're likely to launch their own stablecoin. This is after the market for stablecoins grew by 388% to over 140 billion, as annual adjusted transaction volumes in stablecoins crossed $5 trillion. So basically, we're well on our way to stablecoins being the dominant payment rail in a lot of different aspects of the digital economy. It's used today mostly, as the payment mechanism in crypto. But let's be honest, anybody who's ever sent a wire cross border knows that a stablecoin is just a much better, easier, and faster, cheaper way of moving money between people. So you just got to create a user experience that most people are comfortable with, and I think it's going to completely dominate. So those are some of the big sort of financial trends and numbers that we've seen playing out both last year and in 2022. One of the things that I'm really curious about is, as looking at it from an investment perspective, are the kinds of narratives that are going to dominate how we look at investing into crypto assets. So in 2020 was the year of DeFi summer on Ethereum, and the best things to own at the time were the native tokens of DeFi projects on Ethereum, things like Uni, Comp, Wi-Fi, and others. And I think a lot of people expected that trend to continue into 2021. What ended up happening, though, was that those names didn't perform as well as those new layer ones, those new Ethereum competitors emerged, and the applications built on top of those platforms did start to capture more and more value. So the story was all L1s and Ethereum killers. And I think there are probably a lot of people who think, Ethereum is a boomer coin. It's something from the past, and now there's these new things and they work better. I'm of a very different view, and I think Andrew shares this view, which is that actually there's all these different blockchains, and some do things better than others. Maybe some are super secure and some are super decentralized and therefore super slow, like Bitcoin, and others are super fast and more efficient, but maybe not as secure. And ultimately, all these different design implementations are going to be needed because the most scarce resource in the world for the next decade or so is going to be block space. So I think you're going to see not just Solana and Avalanche and Luna and Terra, gathering assets, gathering users, gathering applications. You're also going to see the emergence of lots of other so-called layer ones, and you're going to see scaling solutions and all this other stuff. And so amidst this mix of all these different blockchains, what is the dominant narrative going to be? And I think it's going to be around the multi-chain and around interconnectivity. Basically, how are we going to make sure that this isn't just a bunch of silos with their own communities and their own little fiefdoms, and they're all doing their own thing and they're not actually interacting with each other? Well, in order to do that, you need a way for these different blockchains to communicate to each other and to interoperate. And we've talked to a few folks in the Cosmos ecosystem in 2021. We talked to Ethan and to Sunny, Agrawal, and to others. Ethan Buckman is the creator of Cosmos. And I think that, they have pointed this out earlier, and I think maybe this is an idea whose time has come, and already we're starting to see a lot more people talking about it. So, if you're looking at this investment mandate or investment landscape, and you're thinking, well, what's the new, L1 that's going to come along to kill, Luna or Solana? I think that's fundamentally the wrong way to think about it, because I think they're all going to succeed, but the thing that brings them together could be the one that succeeds the most.
Yeah, I think that's a great point. I mean, we've hammered this point home a lot, but we're obviously big believers in sort of the multi-chain thesis. I think there's sort of three waves of smart contract platforms. Obviously, the first wave was sort of Ethereum, which focused on security over everything, and decentralization. And we're presently in sort of the second wave, which is more scalable chains, things like Polygon, Solana, among many others. And I think the next wave is perfectly suited for projects like Cosmos and Polkadot, which is sort of use case specific blockchains. I sort of think of blockchains, they're, I guess, partly a technology platform, but also sort of as like a digital sovereign nation. And typically what you see in sort of macroeconomics is countries will specialize in sort of certain industries because they have a competitive advantage in them. And so I think networks are going to have the same sort of, it's going to play out the same way with these blockchains where blockchains are going to focus on specific use cases. And we talked to Sunny from Osmosis, which is a perfect example of this. He's building sort of a Cosmos chain, IBC chain, specifically for AMMs. And I think that makes a ton of sense. And he sort of talked about the different advantages that sort of full stack approach does. We're all, me personally as well, like we're building SX network, which is for sort of prediction markets and related applications. So I'm obviously a big believer in that thesis. One thing I do want to talk about also is what I call sort of the DEX flippening. We're still far away from it now. I'm looking at sort of CoinGecko and DEX volume is around 5% of the total spot market, which is estimated to be about 100 billion a day. But increasingly what's happening sort of, if you go down in the trenches, is that the liquidity for long tail tokens is actually much better on these decentralized exchanges on DEXs. And you're seeing a lot of there's a lot of, we can call them boomer altcoins, where the liquidity mostly resides on centralized exchanges. But for a lot of the newer, smaller tokens, the nexus of liquidity resides on these decentralized exchanges because they're easier to get listed on. You can get farming rewards. There's just a ton of benefits over being on a decentralized exchange. And it's sort of, there's a whole new generation of crypto traders that are sort of growing up. I mean, it's only been a couple of years, but they're more and more sort of accustomed to trading on DEXs. And if we're sort of right, and these smaller tokens continue to gain, you're going to see more and more volume and liquidity shift to DEXs. I don't know if we're going to hit the flippening this year, but I think we're going to get much closer by the end of next year.
Well, we'll see about that. There's another flippening that people are looking at, which is the derivatives versus spot flippening. I actually don't know if that's already flipped, but there's a very revealing report out from Bloomberg the other day that showed that Binance's trade revenues come disproportionately from the perpetual futures market and other derivatives than they do from the spot. So like a lot of other markets, as the spot market becomes more mature, there's a proliferation of related, contracts and agreements and financial products. And I think something happening in crypto like that is no surprise as well. Another big prediction that I'm looking forward to in 2022 is the adoption of Bitcoin by more large corporations. Now, it turns out that there is a very arcane but very important accounting rule that could have a very big influence on this, which is that today, crypto assets, digital assets, are listed under US GAAP as intangibles. And so what that means in effect is that if they are written down for any reason, they can never be written back up. So they can never actually increase in value. So if you're a publicly traded company and you've got $1 billion, position in Bitcoin and it goes down to 750 million, you've got to book a $250 million loss, which flows eventually through your income statement. So there is a growing caucus of people, tax, or I should say accounting experts and so forth in the US that are lobbying to get that changed. And if they're successful in getting a change from intangible assets to anything else, cash and equivalents or some other thing, then it could actually open the door very widely for more and more companies. Right now, there's a few specialty companies like, MicroStrategy owns Bitcoin, or Tesla owns it because, it's great marketing and PR. But for this to become a financial asset that I think is going to be widely held across balance sheets as a store of value, which is frankly how we at Ninepoint see it, then I think you need to make it easier from an accounting perspective to do that. So it's possible that at some point in 2022, there's going to be that rule change, and that could create an absolute wall of buying of interest from companies. A lot of CEOs of big publicly traded companies will say that they own Bitcoin. I mean, Tim Cook from Apple says he owns Bitcoin and crypto, and he's owned it for a while. But Apple has a $200 billion cash position, which it uses mostly for buybacks. And it's got to manage that treasury in a responsible way. So if responsible treasury management involves having a diversified portfolio, which could include Bitcoin, then it's very likely that CEOs of companies where the CEO himself is interested and owns the thing might find themselves owning it as well, right? That's just a guess, it's conjecture, but if the rule changes, I can't help but think we're going to see a lot more interest from CEOs and from corporations, which is a really important thing that we certainly have been following for some time. And it's worth also just pointing out as well that even in 2021, we did see some big milestones. Tesla, I mentioned, Visa opened its door to crypto. El Salvador adopted Bitcoin as legal currency, as legal tender. Tech giants and other companies got into the metaverse. PayPal encouraged and allowed for crypto transactions. And so we're just seeing a ton of interest from across the board. And I think it's only fuel for the fire for where we're headed.
Yeah, and Bitcoin's still so critical to the whole crypto ecosystem. I know a lot of people are sort of talking about how the space is becoming more and more fragmented and sort of uncorrelated, which is actually a good thing. It doesn't really make sense in a lot of ways that the whole space should sort of move up and down, though obviously it is sort of a risk-on asset that is highly leveraged to sort of global risk appetite. But with that being said, I think as Bitcoin sort of grows, typically what happens is sort of new money comes into Bitcoin, and then people rotate out of Bitcoin into sort of these altcoins. And so any new money into Bitcoin really sort of flows down into the whole space. And so even people that are sort of anti-Bitcoin at the end of the day are still cheering it on. I think one thesis that's really big for me is sort of related to what you were talking about with the space going increasingly multi-chain. And as we go multi-chain, the sort of importance of bridges is going to grow, but there's a lot of people have sort of talked about how these bridges there's some security trade-offs. They're not going to really work the way we want to. There's always going to be friction, and so I think what's going to happen is we're going to see what I call the DeFi bundling thesis. And so what I mean by that is DeFi applications are going to increasingly expand horizontally. And so things that used to be projects like Uniswap, for example, which is pure play AMM, decentralized exchange, will increasingly be incentivized to sort of follow SushiSwap's, what SushiSwap has done and sort of expand horizontally into these other DeFi use cases like lending and perhaps we'll see sort of a compound stablecoin, for example, because at the end of the day, it's sort of similar to what's happened with centralized exchanges. So obviously, like Binance and started with spot crypto and then sort of moved into derivatives, lending, pretty much everything. And the same goes with FTX, which started with perps and then sort of moved into everything, including NFTs. I think that exact same thing is going to happen with DeFi applications, because at the end of the day, they're monetizing sort of liquidity and attention. And it doesn't make sense for them to sort of maybe just limit themselves to one use case if their consumers or users sort of are using all these other use cases, and things are getting increasingly multi-chain and less composable. And so you can't sort of rely on third parties to provide for everything. And so I think with that, I'll give you sort of the last thesis.
Thanks. It is DeFi Decoded, so we should end with the DeFi topic. We talked about the size and growth of the industry in 2021. In 2021, DeFi went from 20 billion of TVL to 250 billion. And I think it's pretty fair to say, based on that trend, that we're likely to hit $1 trillion of TVL by the end of this year. That would suggest actually a decline in the growth rate by more than half. So it's possible that we far exceed that. But I think that $1 trillion is important. And, $1 trillion is $1 trillion. $1 trillion here, $1 trillion there, it starts to turn into real money. And I think that that'll be an important milestone for a lot of people in the traditional world to wake up to the potential of this asset class. But more importantly than size, I think we're going to see a broadening of the user base in DeFi in a way that I think will augur well for its future. So I'd say that probably up until now, most DeFi users, most active DeFi users are real crypto native types. It's a large group of people, to be sure, according to our analysis. The total number of DeFi users exited last year around 4 million. That's not like daily active or monthly active users, but these are people who are using these different kinds of services and protocols. But that's still a very small number. So if DeFi is ever going to reach the impact we think it has, which is to replace certain functions of the industry, to make it easier and more accessible for people who maybe are unbanked or don't have access, then I think it needs to become easier to use and more intuitive. And I think we're going to see some big leaps forward in 2022 around user accessibility. Already, if you look at the quality of the experience of using a lot of wallets, it's improved a lot, and even improves on different platforms. The native wallet for the Cosmos ecosystem is called Kepler. It's basically about as easy to use as any other Web2 service you've ever used. So I think that stuff like that will make it a lot easier to access a much larger user base. And I do think it's going to continue to come from the developing world. And we've actually done some terrific analysis on this, which suggests, let me just pull it up, that global crypto adoption led by Vietnam, India, Pakistan, the Ukraine, and Kenya rose by 881% in 2021. So it's not Japan, Switzerland, Singapore, and England. These are emerging economies and populations with large young groups of large young people. And I think that if you look at the rate of downloads for certain things like Axie Infinity, we know is very popular in the Philippines. So too is MetaMask in Southeast Asia. That obviously there's a lot of interest from the global South and from developing countries. So that's something that is not new. It's true for DeFi. It's also true for Bitcoin adoption, where we see more adoption in places like, Argentina and Nigeria than in other parts of the world. And I think that's only going to accelerate. So that's something that makes me certainly hopeful for 2022, which is that the promise of DeFi will be fulfilled by its potential, and that it will begin to have a really meaningful difference. And that means creating a more fair, more efficient, more secure, more private, and more useful and more dynamic and more global financial system for everybody. And that's something I think we can all look forward to. And that'll be something we'll talk to a lot of our guests about this year. 2022 is set to be a killer year in terms of guests. Don't want to give too much away, but in the next few days, you'll be hearing from Matt Rozak, who's a prolific investor and entrepreneur in this space, from Bill Barheit, who's the CEO and founder of Abra, from key stakeholders across some of the big DeFi protocol areas, and much, much more. It's set to be a terrific year. We're looking forward to going on this journey with you. Thanks for being a listener. Tell your friends about it. Rate us on wherever you get your podcasts. And until next time, take care, be well, all the best. See ya.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.